After a 4-year long journey, the US Fed has finally, on September 18th, they have delivered a rate cut. There was unprecedented rise from negative to 5%, more than that, and now they have cut the rates by 500 basis points. Now, while underscoring the world's largest economy, they are the Fed is saying that it is in a good shape. Inflation is on the downtrend, and US central bank is healthier compared to previous years. This 50 bips rate will boost the equity markets worldwide. Stocks on back of this news, stocks rose to record highs but met with profit booking due to elevated valuations. Nevertheless, the Fed's move is a good news for emerging markets like India, as it has indicated that the rate cuts will continue till 2026. The Fed has projected to cut the rates by another 50 basis points, 500 basis points cumulatively by the end of 2024. And it foresees the scope for a full percentage point rate cut in 2025 and half a percentage point cut in 2026. The US Fed rate cut and its impact on the Indian stock market, just to analyze that, the Fed rate cuts and adopted a dovish stance, which bodes well for emerging markets like India. With rate cuts expected to drop by over 200 basis points in the next 2 years, India will likely see a sustained inflow of foreign capital as the investors are drawn to the country's robust economic growth and also the markets which are most sought after in the emerging market space. Rate cuts in the US are positive for Indian currency also, as they will cause some weakness to the dollar, which is generally positive for the Indian markets. It is negative for a few industries like IT, but it is positive for a lot of other exporting industries and importing industries. There is sustained buying by foreign investors, which we could see, and a robust Indian macroeconomic outlook may support the stretched valuation of the Indian stock market, or at least give it some time, which is good enough so that the earnings can catch up with the valuations as of today. In this scenario, some investors believe that large caps are safe bets. There are defensive sectors like FMCG, Pharma, private banks, which are safe bets. They are to be looked at. Rural consumption is on a high, so stocks related to rural consumption are good. Of course, rural consumption is on a high because there is very good rainfall. The festive wedding season is coming up, which is very positive. This could help in consumption of goods in the coming months, domestic consumption. The banking sector valuation is also relatively attractive. So on the basis of the Fed rate cut, these are the sectors which one could look at for investing.